Hello, my name is Emily Hafman, and I'm here to present my final project for MBA 562 Financial Analysis to Drive Business Growth on the company Polaris. So just some background on Polaris to start. Polaris is a company known as being one of the global leaders in power sports. They power passion and pioneer new possibilities for all those who play, work, and think outside. The company specializes in designing, engineering, and producing off-road vehicles known as ORV, which include all-terrain vehicles known as ATVs, side-by-side vehicles for recreational and utility use, motorcycles, small vehicles, marine equipment such as pontoon, deck, and cruiser boats, and snowmobiles. These products comprise greater than 35 brands that make up Polaris. The company was established in 1954 when the founders were looking for a better way to travel through northern Minnesota winters. Relatable for us here in Wisconsin who experience snow on a yearly basis. Today, they continue to be headquartered in Medina, Minnesota, where they were founded and where one of the first snowmobiles in existence was developed. Ever since this development, the ingenuity and ability to think outside has driven Polaris forward as they pioneer product breakthroughs and enrich experiences that help people work and play outside. They continue to create new ways to help people experience the outdoors to the fullest. They now serve over 120 countries with over 16,000 global employees. In regards to a competitor to Polaris, it was kind of difficult to find a competing company that had the information that I needed to complete this project. After a lot of research, the company that is probably the most directly competing with Polaris is called Arctic Cat, which is another company that designs, manufactures, and sells snowmobiles, ATVs, and generators, any parts, accessories, anything like that. But they are not a public company, so I can't use them for this project. So I have gone and chosen to utilize Harley-Davidson as my competing company. This company is a manufacturer of premium motorcycles. They design, assemble, and market them and their parts and accessories while also offering motorcycle-related general merchandise on a wholesale basis. They were founded in 1903 out of a small shed here in Milwaukee, Wisconsin, and they are still headquartered here to this day. The company sells and markets motorcycles through a network of independent dealers in the US, Europe, the Middle East, Africa, Japan, Canada, Australia, New Zealand, and other countries. They operate with nearly 5,800 employees. While they don't offer as many of the power sport options as Polaris, they do compete with Polaris in the motorcycle industry, making this a valuable competing company to compare Polaris against. Now I'm going to go into my financial analysis on Polaris. For the duration of this presentation, I have used line graphs as well as shown my Excel tables in order to give you just a better picture of the exact figures that my line graphs are displaying. Just to clarify, the x-axis represents the years. The number 1 represents 2018, 2 represents 2019, 3 2020, and 4 2021. In my Excel charts, my data flows in the opposite direction, with data from 2021 presented first, as I have it in my Excel workbook. Furthermore, the purple line on the graphs represent Polaris, and the green or teal represents Harley-Davidson for the duration of this presentation. So the first place that we will start with for the financial analysis is with the profitability analysis. 2021 was a record year for sales for Polaris, which totaled over $8.2 billion. That was a 17% increase from 2020. As the graph shows, sales have been steadily increasing since 2018. Polaris grew across all segments and regions, mostly due to increased shipments, but also to higher pricing when they compared it to 2020. And this is because they temporarily had to suspend select plant operations as a result of COVID-19. As many companies have been affected, so was Polaris. In order to compensate for these closed factories, they did have to increase their prices. While you would think that this would cause a decrease in sales in 2020 and beyond, the opposite actually was the case. The demand continued to grow for the power sport machinery, especially in social distancing times, which then allowed them for their sales to continue to grow. As you can see, Harley-Davidson did see a pretty significant decrease in sales during the height of the pandemic in 2020, which speaks even further to Polaris's success during this time. The gross profit analysis shows a very similar trend to the sales trend. As they have continued to increase in sales, They have also grown in gross profit, as gross profit is calculated by taking sales and subtracting the cost of goods sold. You can once again see how Polaris stayed steady and continued to rise, even if it was slightly during the pandemic, while Harley-Davidson took a major dip in gross profit during this time. 2020 looks like it was a real rough time for Harley-Davidson, but Polaris was able to stay on that upward trend. As I previously discussed, there was a large increase in demand for some of Polaris's equipment, specifically boats and off-road vehicles. And then in 2021, Polaris really worked hard, expanded and strengthened their off-road vehicles, snowmobile, motorcycle, boat products with over 30 new vehicles and nearly 500 accessories. It also helped that GEM and Taylor-Dunn divested during the fourth quarter of 2020. Net income is what businesses have left over after all expenses, including salary, wages, cost of goods, raw materials, and taxes are all considered. The net income analysis shows that both companies took a step back in 2020 at the heat of the pandemic. And like I've said before, Polaris was forced to close several manufacturing plants to accommodate, and it appears as though Harley-Davidson did take an even bigger hit during this time. As Polaris was still forced to pay for their buildings, energies, employees, despite it not operating, it does make sense that their net income took a hit. Polaris was able to bounce back and respond to these setbacks and the even larger demand that it created, which is good for the future. The fourth quarter sales for Polaris increased to $2,170 million, which was a 1% increase from the previous year in 2021. So this is all good things. We're growing at the rate that they need to be growing at, and despite that setback that they faced, they're continuing to move forward. Gross profit margin is a metric that is used to assess a company's financial health by calculating the amount of money left over from product sales after subtracting the cost of goods sold. It is frequently expressed as a percentage of sales. You don't want a profit margin that is wildly fluctuating, as this may signal larger issues, but Polaris is currently on a slight decreasing trend in regard to gross profit margin. While they are currently increasing in sales, their profit margin is not increasing at quite the same velocity due to the increased cost of production due to inflation. This decrease in, I apologize. The increase in cost of production is expected to continue to increase in the coming years due to the pandemic, and those results have not gone away. The return on assets ratio is calculated by taking the net income, dividing it by the average total assets. The average total assets are found by taking the total assets for the current year, the total assets for the previous year, adding those together, and then dividing that number by 2. In general, the higher the ROA, the more efficient the company is at generating profits. A 5% ROA is considered good, but anything 20% or higher is great. Polaris did take a big leap between 2020 and 2021, and they're now back on track and generating profits in an efficient manner. I think everyone can attest, as I'm sure every single presentation is talking about, that businesses did take a hit in the heat of the pandemic, but it is extremely encouraging to see that the graph is now going back in the right direction. Based on the graph, it is very clear that as a whole, Polaris is more efficiently generating profit than Harley-Davidson and managing its balance sheet to generate profits. Since Polaris's ROA is higher than Harley-Davidson's, they are able to earn more with a smaller investment. The next step in the financial analysis is the asset analysis. The receivables turnover ratio refers to an accounting measure that quantifies a company's effectiveness in collecting its account receivables. Accounts receivables are the money owed to a company by its debtors. The ratio takes a look and measures how a company uses and manages the credit that it extends to customers and how quickly the short-term debt is collected or paid. Efficient companies have a higher account receivable turnover ratio, while inefficient companies have lower ratios. Customers that pay their debts quickly will provide a high receivables turnover ratio. With this being said, Harley-Davidson has a much higher receivables turnover analysis. Perhaps this is because they have fewer big customers or they're better at paying back their fees quickly. Despite this, Polaris's ratio has been steadily increasing, which is good for the company. Overall, all companies are exposed to credit risk on accounts receivables, as there's always that chance that debtors and retail partners might not be able to pay back their obligations. But overall, Polaris is doing pretty good. Their customers pay back in a timely manner, and they're moving in the right direction. Inventory turnover is a financial ratio showing how many times a company has sold and replaced inventory during a given period. Calculating this turnover ratio can help businesses make better decisions on pricing, manufacturing, marketing, and purchasing new inventory. For most industries, the ideal inventory turnover ratio will be between 5 and 10, meaning that the company will sell and restock inventory roughly every 1 to 2 months. The turnover rate for both companies appears to be very similar, although Polaris is on a steady decrease while Harley-Davidson shows no specific trend. They're kind of jumping up and down, as you can see by the way that their line moves. Lower inventory turnover rates can mean a variety of things, including excess inventory, overstocking, or too little marketing. With Polaris, sales have been on the rise, so I don't really think that the issue is overstocking, excess inventory, because the demand has been high as well. But since there are no drastic drops, I don't think it is an area of concern for Polaris at this time. Liquidity and cash flow analysis is the next step in the financial analysis. Operating cash flow indicates the amount of money a company brings in from its ongoing regular business activities, such as manufacturing and selling goods, or providing a service to customers. Operating cash flow indicates whether a company can generate sufficient positive cash flow to maintain and grow its operations. Otherwise, it may require external financing for any kind of expansion that it wants to do. The operating cash flow is another statistic that seems to have been drastically affected by the pandemic for both of these companies. Despite this, there has been a large increase for 2021, and the CEO of Polaris states that he expects it to keep growing in 2022. In terms of cash flow from investing activities, the number decreased between 2019 and 2020, but has once again grown from 2020 to 2021. This is likely due to the increase in product that we are spending money on to grow our company as a whole. Like I talked about, they developed over 30 new vehicles, so much new equipment, and some of that money is going into investing into these new products. In terms of cash flows from financing activities, a positive number indicates that cash has come into the company, which then boosts its asset levels. A negative figure indicates when the company has paid out capital, such as paying off long-term debt or making a payment to stakeholders. And according to this graph, neither company has a solid trend that they're following, but it is apparent that Polaris is working to cut down on their debt, as they have been in the negatives for the last 3 years, which is a good sign. A good current ratio is between 1.2 to 2, which means that businesses have 2 times more current assets than liabilities to cover their debts. A current ratio below 1 means that the company doesn't have enough liquid assets to cover its short-term liabilities. It seems as though Harley-Davidson is a bit higher in regard to the current ratio than Polaris. If your current ratio is low, it means that you will have a difficult time paying your immediate debts and liabilities. This is something that Polaris should definitely focus on in the coming years. Keeping the current ratio greater than 1 should be a priority, and getting it closer and greater than 1.5 is an even greater priority. The final component of the financial analysis is the debt analysis. The debt to total assets ratio shows much of a business is owned by creditors or people it has borrowed money from, compared with how much of the company's assets are owned by the shareholders. The ratio is greater than 1, business has more debt than assets. If the ratio is less than 1, the business has more assets than debt. This ratio is very important in determining the financial risk that a company may face. A ratio that is greater than 1 may show that a lot of the assets are funded by debt and that the company then is at higher risk. So the lower the ratio, the safer the company. The decimals shown on this graph here can be translated directly into percentages, and as shown, both Polaris and Harley-Davidson have consistently had ratios under 100%. This means that they both have more assets than debt. This ultimately makes sense for both of them as they are public companies. Polaris has been on a steady decline since 2018, and Harley-Davidson is kind of hanging out at pretty similar levels, hasn't really shown any true trends of positive versus negative. This negative trend for Polaris, though, is very encouraging for them as a whole. The final concept that will be covered in this presentation is the balanced scorecard that has been developed for Polaris. So my ultimate goal that I had when I was creating this scorecard is shown on the left here. So continue increased sales growth and profitability with an emphasis on decreasing operating costs to attract an increased number of new and repeat customers who are interested in power sports equipment with innovative products and strategic marketing. Now that's a lot to break down, a lot to think about. I probably should have narrowed it down a little bit, but in the nature of the project that we're doing, I kind of just wanted to get a full picture, full idea for what my goals for Polaris are. So to start, obviously, financially, one of the big goals is to increase gross profit margin. This shows that the business is sustainable in its finances and they're growing as a whole. And we want to increase those sales. I know we've been increasing in the last year or so, but we need to keep doing that, especially with these increased prices that we're facing. With these increased prices, one of our goals should really be to decrease these operating expenses. Maybe this means that we go in, find more sustainable materials, do something to cut down on the amount of people that need to be involved in the development process. Whatever we can do to decrease the operating expenses, because inflation is at an all-time high right now. Other financial perspectives on this balance scorecard include increased cash flows from financing and investing opportunities. We want to keep paying off our debt while still being able to increase our advancements in the field. And then increase market shares and return on assets would be another set of goals that we should work towards. In regard to our customer perspective, one of the big things that I want to focus on is a decreased number of customer complaints. This just shows that we are doing our job as we should. It is important to think about if our company is growing, that means we have more and more customers, which does put us at risk for more complaints, but it is still a strong goal nonetheless. If a decreased number is not attainable, then maybe we should change that goal to percentage of complaints based on the number of purchases so that we get a better idea of how we're doing in that sense. An increased number on the customer satisfaction survey scores will also be important. I think that something that's important is giving them a standardized survey so that we can kind of evaluate it numerically, but also giving them the opportunity to voice their concerns, voice what they need, voice what's going on. This can really give us some good information that way. This increase in the number of new and repeat customers is also important. I think we really need to start tracking the repeat customers and the new customers, because that shows us how we're doing as a whole. Also focusing on decreasing customer service issue resolution time would be another great way to measure our work towards increasing the customer experience. And then finally, in regards to the customer perspective, continuing to increase new products and accessories. As I already stated, they increased a lot in 2021, and we need to keep doing that if we want to keep growing, keep our business successful. In regards to the internal business process perspective, decrease in return rate due to Polaris error. If we are decreasing our errors, that means that we are preventing lost profit and lost funds. As we grow, it's important to keep making sure that our quality is maintained. Increasing the percentage of orders that are delivered on time. This has a direct impact on customer satisfaction and potentially customer retention. So this internal business process perspective can really translate into helping our customers. Keeping an eye on increased time spent on Polaris website. Something that I really think that Polaris should focus on is getting more involved in the social media, the marketing, the strategic scene in that way. Social media throughout this pandemic has become so widefold, so widespread. TikTok, Instagram, Facebook. Now we have ads that just are catered to what you're looking up. And if we can get Polaris involved and get some new marketing ideas, some new advancements on these social media platforms, I think there's a great opportunity for our company to grow. So measuring that is increased engagement across social media that is measured by the number of followers, clicks on posts, likes, anything in that sense. And then finally, for the learning and growth perspective, we are looking for decreased employee turnover rate. We need to be tracking this, keeping an eye on it. If we are learning about how many people are leaving the company as well as why, that really will give us an idea as to what's going on. We lose so much money when employees leave and having to train new ones and all of that. So if we can keep them here, that is the goal. Going right along with that, increasing retention and decreasing turnover they go hand in hand. So same kind of concept there. Increasing employee satisfaction on the surveys. That is similar to customer satisfaction. And I think, like customer, we should have a standardized survey, but also give them the ability to anonymously voice their complaints. We need to hear what they have to say. If they're more satisfied and able to feel comfortable sharing their feelings, I think we'll have more success as a whole. Finally, along, as I talked about the social media engagement, influencers are such a prominent thing these days that I think if we can get some specific influencers for Polaris to start spreading the word about the company, I think that will be a great opportunity for us to grow as a whole. And then finally, increase product mentions across social media. All of these go hand in hand, and I think it gives us a real opportunity to grow Polaris. Like I said, I know this is a very broad, balanced scorecard, but I wanted to touch on many different concepts here that I think can really help the company as a whole. Finally, these are the references that I used throughout this project. I apologize for the font being so small, but thank you for listening, and I hope you enjoyed this presentation.